All right. Matt, the mortgage guy. In today's video, I'm going to tell you how to protect yourself, how to protect your time, how to protect your money, how to protect your sanity during the pre-approval process. Not all pre-approval processes are made the same. Not all loan originators are the same. You want to avoid at all costs being given a yes answer that should have been a no answer. I know it might feel better at times, and I know the no's not what you want to hear, but trust me when I tell you, I've got example after example of where somebody was given bad information that could really hurt them. So in this video, I'm going to tell you how to avoid that. All right, let's get into it. Matt, the mortgage guy, mortgage broker, helping thousands of people, giving them honest answers, which is what you want as a consumer, right? And this video is all about getting you the right answer, not the answer you want to hear, right? Examples of where people said, hey, listen, you told me I was only pre-approved for up to 450,000. You guys were nice. You guys were great. I enjoyed the customer service. But over here, they told me I was pre-approved for 600,000. I'm going to tell you why that happens. I'm going to tell you how you can avoid being told a wrong answer or being sold a bag of goods, because it's going to help you avoid a lot of future pain, right? So either it's done intentionally to try to lure you away, or it's done unintentionally because people just don't know any better. You know, maybe they genuinely miss something, right? But I'm seeing it more and more in a rising rate environment, in an environment where home prices continue to go up. People may not qualify for what they want to qualify for. They may not qualify for the price point that they want in the neighborhood they want to live in. And rather than say, you know what, maybe we're going to have to adjust our search. Maybe we're going to have to, change some of the parameters. They'll go out and they'll just keep asking. Loan officer after loan officer till somebody tells them the answer they want to hear. Here's the problem with that. They give them that answer. Just because somebody tells you you're pre-approved for 600,000 does not mean that they can get you to the finish line, right? And I'll give you some real world examples, right? Working with a client who had been pre-approved supposedly and was out there shopping, was out there putting in offers conventional. And, their realtor and them understood that they're probably going to be a little bit more competitive submitting conventional offers. When we got their file and they said, hey, we just want a second opinion. We want you to look at it and tell us what we qualify for and what the rate is and how the whole loan's going to look. We said, hey, listen, based on a BK that you had and how recent it was, we can do an FHA loan for you, but we can't do conventional. This person, no idea how a loan officer doesn't ask or know about a bankruptcy, but you need to know these things. This client, if they got into contract conventional, would not be able to close a conventional loan. They can do an FHA loan and they do qualify. Might be a different amount. It's definitely a different program. They need to know that. Their realtor needs to know that. The listing agent they're submitting to needs to know that as well, right? So one example. Another example is where we had somebody pre-approved for an FHA loan and we had a specific number. Let's just call it 500,000. And they came back to us and said, listen, somebody else told us we could do 700,000. I helped them. I held their hand. I talked to the other lender. What the other lender missed, a little thing called cavers. Where's this? Oh, I had a note up here. Anyhow, cavers is basically a credit reporting system. If you have any federal debt, it's going to show up on that cavers. There was an old federal debt, meaning we couldn't use the wife on the loan because of what showed up on her cavers report. We could only qualify with the husband. That substantially reduced the amount that they'd qualify for. All right, on to a few more examples. And honestly, I could go on for days, but client says, we're pre-approved for this number. We really dig in. We really calculate the income the way an underwriter was, put it through pre-underwriting. After we average 2 years of this client's income, they're qualified for 150 less than what they thought. Again, just because this person said 550,000 doesn't mean they can actually close a loan at that number. Once it gets submitted to underwriting, once the underwriter calculates the income, they're going to come back and go, oh, whoops, my bad. They looked at a few pay stubs or they did a calculation off the top of their head. Work with somebody who's going to do the work, who's going to do a thorough job of pre-approving. If it's some sort of commission-based pay where they need to get a verification of employment that shows the last few years to do an average, you're going to do that. It needs to get pushed through a pre-underwriter to be scrubbed, and you need to make sure that all the I's are dotted and T's are crossed. You want to do that. You want to avoid the pain in the future, right? So another example of that, had one that I remember this specific deal because I talked with my team about it, where this client was adamant that they could have, look at how much money I make. And this other lender said it, and I believe them. That other lender, for whatever reason, was not hitting the non-borrowing spouse on the loan. On an FHA loan, on a government loan, you have to include the spouse's debts, even if they're not on the loan, non-borrowing spouse. Adding in the wife's debts significantly reduced what this person could qualify for. We're not giving you a lower number because we don't want to do a bigger loan. We get paid based on loan size. We're giving you the smaller number to say this is what truly you qualify for. This is what we get to the finish line as a purchase price, right? So what other examples here? I got a list of these. I can't believe these are all in the last month. And I asked my team, hey, put something together. Show me what we've looked at. Get in contract, and the other lender has this person in contract, and 5 days in, you're good. You can buy this house for $300,000. We get the loan because the borrower reaches out to us and wants to work with us. After a little bit of digging, we say, hey, that house you own with your husband, you're on the deed of that house. If we count that debt, you don't qualify for this investment property. The good news is she could deed off and there were some things to be done, but another example of where upfront the work was not done. The questions weren't asked. The thoroughness of the pre-approval just wasn't there. So on tight timelines in a tight market, somebody might cancel on this person, right? There might not be a knight in shining armor to come fix this deal and show her how to come off of title over there and not be hit with that debt. But I could just give you example after example after example. Moral of the story: get yourself pre-approved with a professional who's going to give you honest answers, not the answers you want to hear. If they give you an answer you don't want to hear, sure, you can ask, oh, hey, I thought I might qualify for more. Why so? Me and my team can give you, here's what you make, here's what your debts are, here's how we calculate it. A lot of times, if you have variable pay or you have some sort of pay that's not just a fixed salary, what the underwriter can use and what you see on your pay stub right now in 2022 are two different things. If it's variable, it's got to be, an average of a few years, right? It's not like last month was your best month and that's what we're going to use for a monthly income. Unfortunately, that's just not how it works with lenders. So be careful. Take care of yourself out there. It's a tough market. And the last thing you want to do is give yourself false hope. Go out there, put in 19 offers, finally get something accepted, and then realize you can't close. You're out the inspection money. You're out the appraisal money. Heartache. You might have gave notice at your place you were leaving that you're renting, whatever the case may be. Do a thorough pre-approval with a professional. Listen to their advice. Even if it's not what you want to hear, it's in your best interest to listen. If we can help in any way, we'd be more than happy to. GreatMortgageBroker.com. Let us know how we can help. 2 burning questions I know you want to ask me. 1, do I own anything else besides this hoodie? The answer to that is yes. 2, is this a fake tan? As pale as I am, you got to do what you got to do, right? The answer is yes. Have a great day. GreatMortgageBroker.com. Thanks, guys.